Hey traders, Nick Shaheen here, recapping the day. First trading day of November. It's the 3rd, 2014. Scoreboard first. Flattish to down to up. Dow and SPX flat. Dow down 0.14. NDX is up 0.27, but that's mostly Apple. Apple was up 1.3%. It rocketed up in the morning and then stayed up there. Markets had a little scare with about an hour or so to go, and then they closed decent on a couple of decent candles. Um, but the exuberance of Friday definitely was not here, which was a little surprising. But they're allowed to breathe after an 11% run. Last week was incredible. So scoreboard, mixed results. Let's call it this way. What's not mixed is the VIX. The VIX was up 5%. It was up a little more during the day. So I think the high was almost $15, $14.99 on the VIX. It closed at $14.73, so 20 cents more. What does that mean? It means that everybody's edgy, jittery. Doesn't mean we're going to heck in a handbasket. It doesn't mean that we're going to rally. It just means that everybody's edgy and they're covering their butts. All right, so how did the day unfold? In front of us here, let's look at the micros. This is the S&P right here. So we opened and we seesawed a little bit, then we went down quite a bit to around the 2008-ish, and then we ramped all the way up. Right here, and this is an all-time high, I believe. So if you want to zoom in on this portion of the day, boom, boom. Okay, why do I do that? Because right here, the equivalent time candle, this is oil. We had a big headline on oil, something about Saudi Arabia raising prices for, lowering prices for the US, raising prices for Asia, or something like that. So market rallied, everything rallied, oil rallied, and then from there, this is oil again. Oil went down to $78.11. This, my friends, is a low that in order to see another low like this, you have to go back almost 3 years. I posted a note about that earlier today and on Twitter. And then promptly thereafter, CNBC also mentioned almost exactly what I said. I think, 2.5, almost 3 years is the previous time where oil was this low. For why do I mention this? Because for a while, markets have been trading up when up with up oil, and if you remember, we had a freak out a few weeks in the last 3 weeks when oil broke 80 on the downside. Oh my gosh, the market sold off hard, and then when oil bounced, market bounced, and then from then on, markets have been trading in stride with oil. Oil goes up, market goes up. Well, today oil was down 3%. Markets are not down to 3%. So I had a note saying that markets have been trading with oil more reliably than anything else, even more than the 10-year rate and the inverse relationship with the bond market. And I said in recent days we've had three bounces in the oil. So if I go down and try to capture, let's say 30 minutes, so I said we've had three bounces. I included today's bounce off of 79.50.80, and sure enough, I like jinxed it. The minute I mentioned it, guess what? It puked. So head and shoulder-ish. I may have mentioned that now it looks familiar. Pump, pump, pump. Regardless, oil was down. I thought it was going to bounce off of there, but then I also thought that okay, markets have been trading with oil, but at some point it's going to divest itself from this trading relationship. Whereas the oil, it's going to become more again. Oh my gosh, where's the global growth? Oil's dropping. That doesn't mean that can't mean good things for global growth. So there are some important notes about oil. Number one is that we're almost at 3-year low. Number two is it's a manipulated market, so I can't trust any moves up or down. What does that mean? Remember, today's headline was something along those lines, quote almost, Saudi Arabia sets prices for lower for the US and higher for Asia. Okay, so just the fact that Saudi Arabia sets prices is the definition of a manipulated market, right? Manipulated prices. So just imagine if Apple comes out and says sets its own stock price for the next few weeks. you can't trade it, right? You can't trust to move up on that news because it can come out and say, I'm going to lower the price. So where's homework? Gone. Now we're back to headline trading. So in my opinion, cheaper gas should be bullish because more money in the U.S. pockets. That's for one. And one less thing to put inflation pressure on Yellen to raise rates, and three, more likely to scare Yellen into fighting deflation, which means more QE. So none of these are going to happen, obviously, because it's a manipulated market. I'm not trusting it any which way or another. I'm just sitting on the sideline watching to see what happens and how markets trade along with these maneuverings. So today, the TLT was hammered early. It closed flat, which means it recovered from the day's lows. Conversely, the TLT are the bonds. So usually if they rally, markets drop. If they drop, markets rally. The 10-year rate goes in opposite direction of the TLT, so it moves with the market. And in the morning, the 10-year rates were skyrocketed. Yes, they still closed green, but almost $1 off of the day's high. Actually, not quite. The day's high was 23.84 on the TNX. It closed down 23.48, but I think it was 1.5% up and then ended up about 0.6% up. So those should have been, continue. You can draw a parallel between the performance of the 10-year rates in stride with the market and inversely related to the bonds, TLT. So those are another notes from today's action. The Eurozone being down today hints to me that nothing is going to be delivered from the ECB this week. They say things are priced in. I don't believe in anything ever being priced in. Regardless of whatever moves we've done based on the anticipation of it, we'll maybe take away from some of the moves, but we will move again, direction unknown, when the event actually happens. Okay, so this is the S&P. You can see we tried to rally and then we kind of lost it like right around here, and that's about here where the oil really dropped today. Apple hung in strong. 109 was a pivot point. Why? It looks like, like a J, whatever, this long rise and then sharp, small drop, short drop, and then another long rise. So this area, 109-ish, was like a resting point between two areas of contention. So it's like chutes and ladders. And I was thinking that when it went back down to here, that it might be another easy move down to here and revisit the lows of the days, but it didn't. Champion held. Google had a couple of sharp drops. It ended the day negative, a little more than the market, but decent close, rampant to the close. Small caps were the down. The small caps mini were down more than the actual indices, but they're still their own. The index itself. Like if you look at the RUT and the LIWM, they were down between 0.18 and 0.28, so 0.17, 0.28% down. So based on the levels that we've had from this morning and the pre-open, the market movement today is not surprising. It's within parameters, and we've expected some of these moves. I will revisit those at the end if we have time. But first, I want to cover the whole thing. So this is just how it happened intraday. The NASDAQ, because of Apple's weight, I got scared when I started seeing this. This dome thing is never a good sign, especially when followed by a smaller dome. Kind of like an inverse cup and handle. It's probably not technically that, but the fact that they tried to run it up bulls and then faded, tried again and faded even worse, what's going to happen? They're getting tired? I don't know. So here we are back here. So tomorrow, perfect transition into tomorrow. What do I see? I think that today was kind of negative, even though not a disaster, but it was negative in tone. But all that is out because we're still, liable for headlines. Headlines trump everything. Now tomorrow there are a couple of headlines that are going to come out. One is Priceline, and two is Alibaba. I think Alibaba also reports tomorrow. Anyway, so Priceline and Alibaba are the next movements that are going to fuel or fizzle the momentum stocks, which usually give a lot of movement to the NASDAQ. So If the momentum's rally 2, 3, 4, 5% on the backs of a 10% move in Alibaba or an 8% move in Priceline, then the markets are likely to move up with that, and everybody's going to be happy again, anticipating good things. But that also, therein lies the danger. What if they don't? Alibaba long term, if what they say is true about how much money it makes and how easy it makes it, then it's a no-brainer. But I'm always leery of no-brainers. Regardless, it's a buy and hold for sure if you think it's a no-brainer. Um, but just the way the market got to here makes me nervous shorting, going long anything at this point. So I took some long positions in Priceline and in Alibaba as lotto tickets. I also took some short positions at the not Nasdaq, in the small caps because they're independent of those two. So if markets want to sell off, small caps are likely to move down the most because they have fewer of these big names propping them up. So if the markets want to fall and Apple doesn't want to fall, Apple is like a peg leg. It's going to limit the downside. So I figured I'm going to pick an index that doesn't have a prop, and the small caps is one of them. Not one company is big enough to prop it up. So took small debit spread in the IWM for this week, lotto style. I could have done it for next week. I could have done the week after. I just picked one and I took it. I took it and I picked it higher than the resistance level that I noted in the pre-open. In the pre-open, I said there's some strange high interest in the, gosh, now it escapes me. I think it's a 112 level, and therefore, if if it was going to fall, I would think that we would want to stop ahead of that resistance support, I should say. So I said there's a big open interest is 112, and it looks like it's all support. So I picked something higher. This way, if it wants to come down to 112, I can profit from it. So overall, I haven't done anything major. I'm just managing open in a position. And if I had a position in danger and today was breathing a sigh of relief, I already told you ahead of time, I would have moved it out away from trouble and up, or shorted up somehow, because I cannot bank on the same direction to continue more than one day at a time. It's actually 1 minute to the other. What if you get another headline like the Japanese headline, or an inverse of that? You whoosh, big whooshes. So you cannot bank on it. So you play it safe. Fight the battle with binoculars. Don't be immediately behind the sandbags. So that is the spirit of today. So let's zoom out and look at today. Actually, I should go on the daily, because the weekly is only one day. It doesn't tell us much. So we'll go to SPY dailies. You remember this from the lesson the other day? Doji. It is doji-ish in nature, even though it's an all-time high. Wow, saying that it's an all-time high on a red day across the board almost is just sounds wrong. Sounds wrong. This is Friday, doji, indecision. This is indecision. This indecision is right in the middle of the range. So they opened, they ran it up, they sold it, they ran it up, and then they closed it almost exactly where they opened it up. Here, they opened, they tried to sell it, they rejected it, and they closed it at the day's high, even though close to where they opened. That's bullish. This one, not so much. This is a perfect doji right here if you want to see. It looks like a plus sign. This is not an exact plus sign, but it's pretty darn close. So it is indecision. So everybody sit back and wait. That's what they're doing. Sit back and wait. Volume, it's not bad, but it's not great. It's below the blue, which is the average 10-day moving, the last 10-day average. So it's lower than the last 10 days, but it's not the lowest of the year. We've had lower here, lower here. So not too much to be said there. Sit back and wait. Meander. Also, this is doji-ish in nature, meaning that there's some indecision, although the range is more negative than, it's a wider range in the middle. So this is a wider rectangle. It still had a pretty high and a pretty low, leaving tails here and here. So it indicates indecision everywhere. And this comes at not an all-time high, but a recent high. So if you consider people overshoot, drawing a line somewhere around that green one is pretty close to the all-time high. So it is close to highs after a huge run up. I mean, this is a huge run up. So they're allowed to breathe and be indecisive for a little bit. Volume was pretty decent too. Not big, but pretty decent. So let's look at the cues from the perspective of trends. Gap, that was Friday. And then today is, not so much, kind of a candle. Doesn't tell me much because of the skew that a handful of stocks have an effect on there. Volume is also not that exciting. So again, ramp like you wouldn't believe. This is not an all-time high. I'll show you folks why. Lesson in history. What is this? The dot-com bubble. This is a 20-year look of the NASDAQ. Dot-com bubble. Let me go to today's candle right here. So last time we got to this candle, I said this level. I said we are within 30 days. Each candle here is, it's no longer a daily, it's a month. So this is 1 month, 1 month, 1 month. So we are at a level right now within 30 days of the Dow, the NASDAQ's all-time high. That's the biggest bubble that everybody referred to, the dot-com bubble. This is it. We're within 30 days of it. Points-wise, we're not. We still have, 12% to go. But the ramp was incredibly steep. I mean, we think this ramp is steep. Look at this one. El Capitan. It's a cliff, a sheer, whatever you call that, rock wall. So within 30 days, yes, but we still have a lot of points to go. But we have to adjust the number of points because of the slant, if you're a math whiz. I'm not going to do it, but I'll eyeball it. So yes, this was a great test and sell-off. Great candle right there, but I'm still leery. I mean, look at the steep climb and look at how close we are to the all-time high. That's why I'm more inclined, more scared than a downside scenario than a leap up. I mean, yes, we could have the leap up, but then what? Even if we do get it, then what? Okay, I need a game changer for me to hop on board of the leap up. I need the game changer. I don't have one yet. By that I mean I need a reason to be bullish. I need to show Apple is going to triple this. Bank of America is going to do this. Citigroup is going to do that. AIG is going to do this. I need to know, hey, Yellen's going to dump more money. I don't know. That'll be a game changer a little bit. So, okay, I'm running out of time. 20 minutes. This is the snapshot of the indices, and as far as Apple's concerned, since it is an index all by itself pretty much, if you draw the pattern that we were trading right here at like an up channel, ascending channel, we broke above it comfortably, well above into resistance. So now it's comfortably into resistance. And I mentioned ahead of the open, I'm interested to see how that changes tomorrow. The upper end of the resistance is 110, and it's kind of like free to go above 110. So I mentioned today it's at a point where it was tightening during the day. Let me go back to that intraday. Right around here, I said, boy, it's so quiet and tightened. What do I mean by that? It started here, range is up and down. So the range is from here to here, and then suddenly for the last hour that day, that point in time, right here, everything is within like 20 cents. First it's dollars, and then now it's within 20 cents for quite a bit, and it's like winding. You can feel it tight. And as soon as I tweeted it and mentioned it, it opened up the floodgates. Doesn't mean that I foresaw it. I said, as a matter of fact, I said it's either going to break out of that into an insane high, or it's going to give back some. That's almost exactly what I said. And it gave back some, like a buck, not even. And so I'm still in that wait and see mode. How is it going to handle this major resistance? More importantly, how are traders going to do? What are they going to do? They're so far holding the line. The resistance line hasn't changed for like 3 weeks. They're still hard set. They want it at 105 and ideally maybe 100, but it's not going to happen without a reason. So now they're still hanging on to it. I want to see what happens tomorrow. I want to see what happens with all these open options, open interest positions. Do they change, or are they still wait and see with hopium? Personally, if I had a position in trouble here, I would not wait and see. I would move it if it's in trouble. If it's in the money the wrong way, or it's losing value the wrong way, I would do something about it right now. Because if I'm right, I just gave myself a little time and space to be right. then I'm going to be right next week. So why fight it now and leave myself with no way to go in case the coin flip doesn't go my way? All right, so I'm going to leave it right here, almost at 20 minutes. I appreciate your time. I'll try to do another video with different, with particular tickers, either today or tomorrow. Depends on the headache I get. So until then, thanks for spending some time with me. Nick Shaheen signing off.